Seasoned investors, first-time home buyers, realtor partners, buying South Florida here again. My name is Dominic Pietro. We, of course, have Mario Rodriguez here. We have some exciting news to share with you guys today based off of the previous Hometown Heroes program that is being offered in the state of Florida. Mario, if you'd like to start off and kind of give us a breakdown.
Guys, so maybe we can start with explaining what the Hometown Heroes program was, right? So this was a program that was launched earlier this year, last year actually, and it was to help first-time home buyers with their down payment and closing costs. Now, the criteria for to qualify for this grant from the state of Florida was number one, you had to live in Florida, you had to buy a primary residence, but most importantly, you had to be a first responder, a teacher, firefighter, right, and so forth. So with this new update, there's actually very exciting news, and now the program has essentially been opened up to any first-time home buyer. Sure, there's some criteria, and we're going to go over which criteria is needed to qualify for this program, but you no longer need to have or be employed in one of these professions. So if you've been waiting on the sidelines for to save up your down payment and your closing costs, there is no reason for you to continue to wait to buy your first home. So Dom, tell us a little bit about what the first-time home buyer criteria is, what Hometown Heroes is, and so forth, the limits, and we can start there.
Yeah, so pretty much Hometown Heroes is going to be what they're going to consider a grant program here in the state of Florida. Like you mentioned, man, they had specific occupations. It was very capped as to who qualified for the program, right? It was a great opportunity. We had first responders, medical professionals, teachers, janitors at, the medical facilities, schools, whatever it may be. So they did have a great, a select few people that were able to qualify for it. But now what's happening is the state of Florida is actually opening it up to everybody. So everybody's going to be able to qualify for this program as long as you meet the specific criteria, such as it has to be your first time home, buying a home. Whether that's, first time home buyers, if you're looking, most people like to do FHA. This one, actually, we have an FHA program. We also have a conventional program that we can offer. So anybody who's looking for the first time to own a property, you're able to qualify. Now, there are a few stipulations that we have to address right up front. There are income limits and loan limits as well. I think you have those down, Mario. I don't know if you want to share those numbers.
And guys, one of the reasons we wanted to jump on here and bring this information to you, because there's a lot of misinformation out there. There's a lot of very crucial and important information, that details that's being left out when I've seen TikToks and other videos talk about this. So I want to go over some of the things that are not frequently mentioned in other videos. I also want to bring you guys the actual facts of this program. That way you can make your own decision, or whatever decision is best for you and your family. So we can start out with up to how much you can qualify for. Before, it was 5% up to $25,000, but that limit has actually been increased. So it's 5% of the loan amount up to $35,000. Now, that $35,000 could be used towards your down payment or your closing costs. It cannot be used towards any real estate commissions, towards anything other than just your normal closing cost, your normal down payment. Now, there is a minimum to this grant, which is $10,000. And that's important because if you're buying anything under $200,000, whether you're first-time home buyer, maybe at 150, 125,000, anything under 200,000, the minimum is $10,000. So you will at least get $10,000 back from this program. So what's really what this program really is a what we call a silent second mortgage. It is repayable, but it's important that you know that the grant is actually a second mortgage that's attached to your property. Now, there is no repayment required, or no monthly payment required on this program, but there is a repayment required when you either sell the property, refinance the property, or you move out of the property. So keep that in mind, guys. And that's very important information for you to know, that's being left out consistently in other videos that I've seen. This grant is actually a second mortgage, and it is repayable. You don't have to pay it monthly. There is no monthly dues or anything like that. It just sticks on the title of your property until you refinance, you sell, or you move out. So it's very important to keep that in mind, right? Now, I have gotten some questions and some pushback as to, you know, people don't want to have a second mortgage on your property. But hey, guys, I mean, what's the alternative, right? If you're missing that 5% for your down payment and the state of Florida is willing to grant you these funds, you're essentially getting 100% financing. It's only in the form of a second mortgage that they can recuperate some of these funds, right? So even though it is a second mortgage under, there is no monthly payment. You're essentially financing 100% of it. And in our opinion, it's a great option for those buyers that are looking to get into the market, but haven't saved up the 5% or the minimum 3.5% for FHA required for down payment.
Right, Mario, and I think that's important too. And what you mentioned earlier is it's a positive, honestly, that they're raising the loan that they would give out, right? So 5% of the loan amount, they raise it from 25,000 to 35,000. They've obviously seen success. The state of Florida has seen success with this grant program. So now they're saying, hey, let's open it up to those other borrowers that might not have qualified for it prior, to give them the opportunity for housing, right? There's a lot of positives here in South Florida, right? We always consider South Florida its own real estate market. So in the sense that they are bringing up the loan amount from the cap from 25 to 35, we now have more eligibility for borrowers around. And I mentioned prior, I do know that there's income limits and loan limits as well. So I don't know if you have that information readily available. If not, I can get it.
Right. So you do have to meet some criteria, right? So minimum
Correct.
requirements to qualify for the program. And we'll highlight some of the key requirements that you should keep in mind, right? The first is the income limit. You in Miami-Dade and Miami-Dade County, there is an income limit for your household of $154,800. So if your household or whomever is applying for this grant makes more than $154,000, you essentially don't qualify for this grant. But sounds to me like it's a good problem to have.
Hey,
In
and to put it in
Broward,
perspective, real quick, just to interject, to put it in perspective, that's 12,900 monthly for both borrowers. So if let's say you and your wife on the loan, you guys want to qualify, as long as you guys are making under $12,900 in these areas here in South Florida, then you qualify. So that's just kind of something for the people at home to maybe get with their spouse if they're looking to come in and say, hey, let's figure out what we make yearly. Let's divide it up by 12. We can have that down. And then you can refer back to this video, check out the income limits there.
exactly. And in Broward, the income limit is $144,000, and in Palm Beach, it's $146,000 annually for your household, right? If you're in another county and you'd like to know what the county limits are for your area, feel free to reach out to us. We will try to put in the link down below, though I think it's only accessible to either bankers or mortgage brokers. But either way, we can get you the information if you are in a different county than the ones we just mentioned. Additionally, borrowers no longer have to be in a certain profession to qualify for this grant. Essentially, any profession, as long as you are a full-time employee with verifiable income of 35 hours per week. So keep that in mind, guys. You must have full-time employment with verifiable income of 35 hours per week. Additionally, there is a minimum credit score of 640. So your credit can't be under 640. We do have FHA programs that we can go all the way down to 580 credit score. Conventional goes all the way down to 620. However, in this program, the minimum credit required is 640. So keep that in mind as well. And you must be a first-time home buyer, right? I think we mentioned that at the beginning. So first-time home buyer, you cannot own or have owned another property and therefore not be considered a first-time home buyer, except if you are a veteran. So veterans are actually exempt from any first-time home buyer requirements. That means that if you are a veteran, you currently own a property, you can actually buy the next property with this grant. So if you haven't saved up the down payment for your next purchase and you're a veteran, this could be it.
Correct. Yeah. And I think another good thing to point out too, Mario, you did mention the minimum FICO is 640. Another one here that I have highlighted just for the people to know is there are no non-occupying co-borrowers or co-signers allowed on the loan. So for example, if you're going in, you're 20 something years old, you want to buy your first place, If you're kind of iffy about your income and you're saying, hey man, maybe I might not be eligible, maybe I might not qualify, I'm going to put a cosigner on there, like someone such as mother, father, sister, brother, whoever it may be, and they're not going to live in the property with you, then that's unfortunately not allowable. We can try to find something out. And if you have any questions on income, whether or not you qualified, please, by all means, reach out to Mario and I. I'm sure we're going to have our emails down there in the bio, and we'll be able to list those there so anybody can contact us, because this is a program that is very, very worth it. As soon as I found out these changes, my friends can vouch, I called everybody. I'm like, hey, listen, this is essentially money that you don't have to put down. You will have to repay. But if you're looking to stay in the property for maybe 3 to 5 years, it's your first home, and you want to build equity in the property, you're going to have to pay the money back. But the main thing to realize is it's not your money in the first place, right? Like, not in a negative sense, but it's Florida's money. You're using it. And then let's say you refinance later on when, a refinance market comes in a year and a half, and that money is due back. You just take it from the equity in the home. And I think that's what a lot of people, there's a misconception there. So you can take that money, get it back when you refinance, when you sell it. Let's say you want to buy another property and you have to move the homestead from one property to the next. Then this departing residence that has this Florida Hometown Heroes, that money that you use, that 5%, the 3%, whatever it may be, is due back. But if you have the funds to be able to put down, if you don't have the funds rather for the down payment, this is gold. And I think as long as we're providing this informative information for people to soak this in, this is a great program to capitalize on.
So, we always like to discuss the pros and cons of different programs. We have, for example, bank statement programs, investor loans, etc. In order to take advantage of this grant, you must do an FHA, VA, or conventional mortgage. So you can't take advantage of this program and do what we call a non-QM loan, right? So you can't do it like a bank statement loan or a 1099 only loan for nationals, etc. You must do FHA, conventional, or VA to be able to qualify for this grant. Okay, so keep that in mind as well. This may be a really good program for, again, someone that doesn't have the funds. If you have the funds for down payment, the pros and cons that you'd have to weigh in is that if you have your own funds for down payment, you may have access to better interest rates than you do with this program. Now, the rates in these programs are very low. They're very aggressive when it comes to their interest rates compared to the regular market interest rates. But if you have your own down payment, you have the option of selecting your own interest rate. Sometimes you can buy down the interest rate if it makes sense for someone. But when you do this grant, you only have access to one rate. So there's one rate option, though it's a very good rate. There is only one rate and there is no buy down option. So keep that in mind as well. There's a couple of other restrictions when it comes to this program. I'll run through them very quickly. I don't want to get too technical with the information on here. But for example, the debt to income ratio on this program is a little bit more strict than your normal FHA conventional program. What that means to you is that with this program, you qualify for a little bit less than you would have otherwise if you did a regular FHA or regular conventional program. If you're looking to do a multifamily, you guys know my opinion on multifamilies as your first purchase, taking advantage of the FHA. This is a great program, a great way to get into a multifamily property. With the down payment assistance, you're essentially come out of pocket zero and you're able to get into a multifamily property and therefore becoming a first-time homeowner and an investor at the same time. When it comes down to condos, you guys know condos in South Florida, I've mentioned before, they're very tricky, very specific way to finance them. When you do this program, you can't access the program and do an FHA condo purchase. Condos down here in South Florida, they're not FHA friendly. So you'd have to do a conventional mortgage if you're looking to buy a condo. Additionally, you cannot finance any manufactured home with VA or Freddie Mac loans, but keep in mind, there are available if we do FHA loans, right? Now, we can't do this loan on a jumbo loan or a high balance loan or anything like that. Guys, keep in mind, it has to be FHA conventional VA standard loan amount. You cannot have any escrow waivers. Sometimes that's important. It matters because of your cash to close and closing costs and so forth, but you can't waive escrows. That means you must include your taxes and insurance as part of your monthly payment, right? There are no second or additional second mortgages. The reason I want to mention that is because one of the niche products that we have on the conventional side is when someone's buying a condo and the condo doesn't qualify for financing, we actually have a product that we don't require the client to give 25%, with 10% down from the client and a second mortgage from a home equity line of credit. We can essentially finance almost any condo, but you can't do that with this program. So what that means to you is that you and your realtor must only look at condos that qualify for financing. We have a list of condos that we can give you that qualify for financing. We can save you a lot of time in that regard. But keep in mind, you must only look at condos that qualify for financing, proper insurance. Condos have proper insurance, enough reserves, et cetera, et cetera. And we can go over those details on a case by case, not to get too technical here. Guys, so look, just to wrap up, these are some pros and cons of this program. In our opinion, it's a phenomenal product for someone that doesn't have the down payment or closing cost saved up yet. This gets your foot in the door into home ownership. You can start building equity, start planning towards your retirement. Sure, it's a second mortgage. You must know that, but it's a way to get in the door essentially with 100% financing. If somebody has access to down payment, then it's worth sitting down with us and taking a look at whether it makes sense for you to use your own funds or keeping that second mortgage as a grant. And I can show you the difference in monthly payments, the difference in interest rates, and so forth. That way you can kind of weigh the options. One more note that I want to mention is if you have additional funds to the 5% grant, you can definitely use those funds to increase your down payment, right? So the minimum down payment for FHA is 3.5, conventional is 5%. But if you want to increase that down payment with your own funds, you can. So keep that in mind as well.
Yeah, and Mario, man, I guess since we're wrapping up here, really all I had was the question for you was the multifamily. I know you touched on the multifamily. So on the 2 to 4 units, like you said, everybody first-time home buyer, the main goal is for us to, the message is, hey, listen, 3.5, we call it house hacking, right? 3.5% down, multifamily, you live in one unit, you rent out the other. I don't know if you touched on this, but the only stipulation I see here with the Hometown Hero program for multifamily is that the borrower must occupy one unit as their primary residence. So duplex, one unit, rent out the other. The duplex itself must be at least 5 years old. So that is another stipulation that the Hometown Heroes will verify. They have to make sure that the property is in a new build per se, has to be around for 5 years. Once they can verify, then it would be eligible.
Absolutely, guys. So this is, if you have additional questions, this is it, all we have. Shoot us a text, email, call us, leave a comment below. This should be something you're talking about with your realtor. If you don't have a direct contact with your realtor, we'd be more than happy to help you. Additionally, if you are a realtor, please don't hesitate to reach out to us. We'll get you on the right track. Make sure that you're showing your properties, the right properties that qualify for this program, and make sure that we get them into the right loan and their chance of home ownership quickly. Guys, also, these funds are limited. There isn't an unlimited amount of funds given by the state of Florida. So take advantage now while the funds are available. We just don't know how much longer these funds will be available to you. So that's all we have for today, guys. I appreciate any comments, any feedback that you guys give us. We look forward to hearing from you. Otherwise, be safe and good luck.